Two Bowls in a China Shop is brought to you by these great companies that are giving us money to let you listen to their stuff.
Bullshit, Kyle. We make this show. You and me. Two Bulls in a China Shop is brought to you by us.
Someone's got to pay the bills, Dan, because it's not our trading.
All right, roll them.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat, smiley face. All right. Hello, everybody, and welcome back to the China Shop. I am your host, Kyle, and joining me again for today's, I guess we'll call it midweek update now, is Erik from ES Invests. Well, before we start talking about the news, of course, I'd like to take a quick moment to say thank you to our sponsors and friends over at Manscaped, Trade Pro Academy, and Orderflow Labs. Manscaped, as everyone knows, is the best in men's below-the-waist grooming with precision-engineered tools for your family jewels, and with Manscaped now getting into the world of beard care, it's the perfect time to take advantage of our exclusive offer of 20% off and free worldwide shipping using promo code 2bulls at manscaped.com. As always, that's the number 2. And when it comes to institutional quality trading education, take a look at tradeproacademy.com. In our free Discord server, you'll find instructions to take advantage of our discount with them as well. And for all you degenerates who enjoy trading futures, you'll definitely want to check into the custom tools and studies over at Orderflow Labs. And everybody who's not following Erik yet needs to check him out at ES Invests on Twitter and YouTube. Any more updates for the McLaren, or is that only for your OnlyFans account?
No, that's the short booty jorts is the OnlyFans. And those
is it too cold for car washing?
Ringing endorsements I hear from all of my one fan known as my wife, and I think it's an enterprising prospect though. I have heels that I'm ready to add in. And for people that are like, oh, you can't handle heels, I just want to shut that down right up front because I've played rugby in heels. So I'm very adept in heels. Thank you very much.
I would want to dive into that, but maybe we'll save that for another time.
I'm a man of mystery.
Anybody who wants to know more about this rugby and heels thing, feel free to reach out with your suggestions, corrections, or questions. You can do that via email at 2bulls at financialineptitude.com, or you can join that free Discord server where everybody likes to get together and share our lessons learned with other like-minded market aficionados. All those links will be in the episode description. But for today, I think we're planning on doing something a little bit different. So I think with the Friday episode coming back, that there's plenty of news discussion happening with the episodes that we put out. So we're going to try to focus, I think, a little less on that. Maybe talk about one or two key stories in the week, but try to relate that into like a trade idea. Like we'll look at some stock specific news and then maybe try to formulate some kind of way to take advantage of the information or our thesis that we generate from the research that we're doing. Does that sound about right?
Yes.
Oh, okay.
And one of the things we talked about that I think is actually kind of worthwhile for people is I think one of the goals that we've talked about is the idea of kind of working on that skill set of looking at information and turning it into a trade idea. Because a lot of times if we're seeing some sort of news reported, very frequently the trade's already happened. We're late to that party.
Yes.
So I think there are important ways to think about trading news, and I'm hopeful that we'll be able to dive into some of that.
Yeah, and I'm excited to kick that off. But since it was FOMC week, though, I feel like we'd be, I guess, not good journalists if we didn't at least discuss what was said.
Ooh, I should add that to my OnlyFans. Not only just booty jorts model, but a journalist.
I think that we could actually probably get credentials. I don't know if we can get into the White House, but we could probably try to go cover stuff.
I probably could if I wore the booty jorts.
I was listening to the FOMC press conference that Powell did, and I was just laughing at myself thinking about what it would be like if I got to ask a question. Yes, Kyle Hedman, financialineptitude.com.
Yeah, that literally would be so perfect.
That would make I think I would be able to die happy if that ever happened. All right, so let's dive into the statement. The biggest thing that stood out to me, and we're kind of talking about this pre-call, was just the stuff that was removed from what the expected statement was, and that was references to COVID-19 and the supply chain driven pressures.
Yeah. I think what we're seeing, at least in parts of that being pulled out, it's an interesting juxtaposition to some of what we're seeing from the earnings statements,
Hmm.
specifically as it pertains to supply chain and things like that. But you were postulating before about the idea of the broader impacts on if supply chain constraints are actually loosening. So I wanted to get your thoughts on that. What are you reading into there?
I'm just wondering if they're seeing it as being less of a contributing factor, or maybe they overestimated it to begin with, whereas the inflationary pressures weren't necessarily all supply chain driven, that there are other factors and that they got that wrong.
I see. Yeah, that's an interesting it's an interesting question. I think whether or not like the primary drivers of inflation, whatever they are, they kind of are.
Yeah.
Because when you look at least in my opinion, when you look at the Fed's toolkit, it is what it is. So, like we
Right.
talked about this, I don't know if this is the last session or the one before that, but we kind of they don't have that many choices.
Right.
So, whether it's driven by supply chain or just broader economic forces, which my personal opinion in this case is it probably is a glorious mix of things. I
Hmm.
don't really see it as one, but if I had to point at a specific driver, it's what happened during COVID. Like that's my highest assessment.
Yeah, we gave a lot of people money. We printed a lot of extra money. We
Huge
Yeah.
amounts, huge
Uh,
amounts. And yeah, that kind of flow into the system has a whipsaw effect.
so you make a really good point. Like, whatever caused it, like, does it matter at this point now? Like, that was 2 years ago.
Right. Well, I think one of the things people forget is, especially with our decreasing attention spans, the economy is a big machine. It
Yeah.
doesn't change as fast as we get to flick a YouTube short to the next one. Some of the decisions that we're making still won't be felt like literally for up to 6 months.
Yes.
So it's a big machine that takes a while to move. So to your point, into the general conversation, I think that what caused it is important just in terms of some of the smaller tweaks that we can make into how we attempt to address it. But
Hmm.
to the broader point, not really, because the Fed doesn't have that many choices on what they do. Their toolkit is, especially when it comes to inflation, people don't realize their toolkit is pretty limited, and and we've talked about this before, a lot of the tightening is going to come from the bond markets. But
Hmm.
we add the additional component of, oh wait, the bond or the Fed went through this treasury abduction phase, and now we're going to be pulling tons of liquidity out. I think those forces are probably still to be felt in a pretty big way.
Yeah, it's like, okay, they put their sledgehammer down. Now they're grabbing the dynamite to try to make the fine tuning adjustments. Like, yeah, they have
That's
two.
awesome.
Yes. I don't know. Was there anything else that stood out to you maybe in the press conference?
Absolutely. I mean, I think it's one of the reasons why we saw a bit of a market rally. And then if you take a look at something like the volatility index, it's at 6 month lows, and it's at 1 year lows. I got to zoom out again to get to the end of this. Okay, it's not at 2 year lows. It's at 1 year lows though.
Hmm.
So the VIX for the S&P 500 is at 18 and a half. And that's, in my opinion, extremely noteworthy. It's still above its average, but it's longer term average, but that's still very high, relative speaking, or relative low, sorry, relative speaking. And I think a lot of that came from the way that the Fed messaged and
Hmm.
armchair quarterbacking it. It's hard for me to say what's right and what's wrong because it's always easy to critique people.
Yeah.
But I do think, again, and I've said this a million times, and I think it's important to reiterate it, Big Daddy J Powell is super consistent. I think it's almost to a fault at this point. Like, I do think we might be going too far. But again, I'm armchair quarterbacking it. And I think the bigger concern that they have is if they don't go enough and inflation, starts essentially reversing again. So
Yeah. Yeah.
I think that was one of the main takeaways is essentially a reaffirmed for the 19th gajillionth time to a target rate of 2% in the long run. And also it was good to see the messaging around the rates, where it didn't seem like this tirade against slower rate hikes, where a lot of people were thinking, hey, maybe we could slow this down just a skosh. And for a while, it always seemed like Big Daddy J Powell was just like, nah, fam, not doing it. But now it seems like there's at least, some receptiveness to it. Because if you look at the new probabilities for the next rate statement, which is going to be coming out 22 March,
Yep.
we see overwhelmingly a prospective target rate of 475 to 500 basis points. So we're still looking at another hike, but we're maintaining a much lower hike rate, at least in general. So
the numbers I saw was an 85% chance for 25 bips and then a 15% chance roughly for a pause, which was very interesting.
Yep. And I think that that's right. Like, I actually think, based on the broader approach, I think that that's probably right here. And I wouldn't be surprised to see a pause increase in propensity, depending on how we see earnings continuing to roll out, and then also how we see earnings forecasts, because that's really informative in a lot of ways against the bond market, but they can always see the bond market. I think we're getting a lot of really important forward-looking information right now in the earnings release cycle we're in.
Yeah, the next FOMC meeting should be very interesting, because they talked about doing a lot of updates to their projections. So they didn't really do a lot of that this cycle, but the next one we should be seeing a lot more of where their thoughts are, what to expect going forward.
Yeah, totally agree with you. And I think in general, it looks like they're at least being receptive to the idea of potentially a pause. And I think that in and of itself is pretty important. I still think I love retail traders, but I hate them at the same time, because we are like piranhas, and we still are just hoping for a reversal. And it kills me.
It's not going to happen anytime soon. He was very clear about that in this one and every other one, that's not happening this year.
About as clear as he could get, and still retail is just like, but wait a minute, he sneezed last Thursday while looking left. Left means we're gonna go. It's like,
left is lie. Left is lie. All right, so I think we spent a little more time on that than we were planning, but
I was following you.
I know it's all good stuff though. Just it's like an onion. Every time you peel a layer, there's something else there that's interesting. I want to just keep digging until you cry.
Well, especially big pieces of just news like this, like we talk about, like the Fed has a big impact, but I really, as much as I joke about not wanting to be an economist, I'm just so fascinated. I'm a student, and I'm actually reading 2 books on the economy right now, just out of sheer curiosity. And it's always interesting to me. So although we do go a little further into detail, I enjoy the depth. I think it's actually kind of important.
I do too. Moving on, then let's take a look at Meta. Then that's the company I was going to bring for today's discussion for looking at trade ideas, since they just reported earnings, and looks like they were received very well.
Yeah.
Let me just run through the numbers here real quick on the fourth quarter revenue topped estimates. It was $32.17 billion versus $31.53 expected, 1.76 per share. Daily active users looks like they came in about as expected. Average revenue per user ticked up slightly. And what was the other? The big piece in here was the 40 billion stock buyback.
Yeah.
The last thing that was kind of buried at the bottom of this article here was showing how shitty his metaverse thing is going. Lost nearly 9.4 billion in the first 3 quarters, and I think that they said last quarter the operating losses in 23 are going to grow significantly year over year.
Yeah, I mean, it's the price for innovation. I still think that it could pay out. I think the timing was early, but I think they probably knew that.
I just don't believe in Zuckerberg as an innovator. Like, he's talking about how great Reels have been doing, but do you know anybody who uses Facebook Reels?
I think it's important to take things like that in context, though, and understand like the user persona for Facebook. I don't think you or I, or probably even our circle, are the typical user persona, but
that's possible.
I still think that there's a lot of users, obviously.
Well, what was the app that he tried to make to compete with WhatsApp? If you haven't heard by now, Manscaped now sells beard products. That's right. Once again, revolutionizing men's grooming with the brand new Beard Hedger Pro Kit. From a beard trim to a fresh shave, the technology behind the Beard Hedger Pro Kit allows you to shape your signature beard look. Now you can finally use Manscaped products to make your drapes match your carpet by going to manscaped.com and using code 2bulls for 20% off and free shipping. God damn, I was going to make that joke. Our friends over at Manscaped were kind enough to send me the Beard Hedger Pro Kit, and I gotta say, I was impressed with the quality and performance of the products. My thick, coarse beard hair has been giving me trouble with trimmers in the past, but the Beard Hedger was able to cut through the thicket without any tugging or discomfort at all. And because the trimmer has one rotary wheel with 20 length settings with only one guard, I don't have to worry about losing or breaking attachments anymore. So I've tamed my mane, and now you can too. No one likes a weird beard, so say goodbye to your stubble trouble with Manscaped's Pro Beard Kit. It all starts with that beard hedger that I mentioned. The thing's a juggernaut of fixing faces. Not only does it have the trimmer with the rotary wheel that gives you the 20 hair cutting lengths on just the one guard, it's also waterproof, so you can shave in the shower and avoid all the hair in the sink. The titanium coated T-blade is tough on hair but smooth on your face, leading to a single stroke efficiency that brings satisfaction one stroke at a time. Phrasing. The Pro Kit doesn't end there though. They also created 4 dermatologist tested formulations for your post-trim care. First is the beard shampoo and conditioner. Gotta remember that all your hair is different. Beard hair, as I mentioned, is more coarse and easier to damage than the hair on your head, if you have hair on your head. That's why the kit has made shampoo and conditioner specially designed to moisturize, reduce ingrown hairs, replace natural oils, and promote beard health. Next, the kit has Manscaped's Beard Oil, an essential piece for your main facial accessory. No one wants a guy whose beard is brittle and dry. The oil relieves dryness both on the beard and the skin beneath while adding a little shimmer and shine, which makes you look extra fine. Cap off the kit with the Beard Balm, a pomade that shapes, styles, moisturizes, and tames for a sculpted look to attract any fellows or dames. The Pro Beard Kit also comes with 3 free gifts, a beard brush, comb, and scissors to ensure your beard is ready to impress. So get 20% off and free shipping with code 2bulls at manscaped.com. Of course, that's the number 2. That's 20% off with free shipping at manscaped.com using code 2bulls. Manscaped Beard Hedger, 1 stroke, 1 guard, 20 lengths.
They bought WhatsApp.
I know, they bought it because they failed at competing with it.
Oh, I see. Yeah, but I mean, big companies do that all the time. I mean, Apple does that. That's just good business. So I think.
Oh, I guess my point is, what has he actually created himself besides Facebook itself? And even isn't that, I didn't see the movie, so I don't know the social network. But
that made me very happy that
I didn't see the movie, but I assumed the plot line was around how he probably stole it from somebody, since that seems to be how all these companies get started.
yeah. And I think, to your point, I think there could be some interesting dialogue around the innovation capacity. You could even look at something like Apple beyond the initial product. They really, let's call a spade, man. The year-over-year iPhone release is neat and all that, but it's really not that innovative.
No, it's just a bigger camera every time, or the fucking emoji thing.
Every once in a great while, they'll come up with something good. So I look at big developed tech companies like this, and I think of a couple things. One, I don't expect them to move as fast as I do smaller tech companies, because obviously they develop a shit ton of infrastructure. But they also create market dominance in some way. And right now for Meta specifically, a lot of it is through advertising. But I think even the transition that he's attempting to make is actually super innovative. I think it's very early, like I said, and I think that's another part of being an innovative person. And I look at stuff like this, and people are called crazy right up until they're called a genius.
Yes, that's true.
I think what people are looking at are like, man, you had a good thing going. Why are you making this, this big shift? And it's a good point. It might not pay off for them. But I also think that the business is large enough and robust enough that they can afford the expenditure, at least for a prolonged period of time, to see if they can actually get it to stick. Because I do know people that are actually using Meta now to telecommute, which is actually wild to me.
Oh, really? Really?
And I also know people that are using the Oculus to create virtual displays. Like one of my best friends, he lives in New York, right? So a smaller apartment. I mean, he's a middle-aged 30-year-old professional and he's married. So my point being though is they still don't have like a huge house or anything. They rent an apartment. So he doesn't have the luxury of having mega desk like I have. Like I have a 40-inch ultra wide with a 20-inch and a 30-inch computer screen, mostly. Not to sound like I'm some sort of stereotypical day trader with a bunch of charts. I like to have YouTube on one of them, an Excel sheet on another one. So let's be very clear about Megadesk's purpose here. It's not to look at a billion charts. But he doesn't have that luxury. So he was explaining to me how he likes to use it, the Oculus, literally for screens. He can create. And so I do think there's a lot of innovation that's going on in catching specific people. I am also very particular with what I choose to adopt. But it's difficult to deny the overall impact.
Well, I mean, I'm probably a little bit jaded because I had an Oculus. I still have one. I loved it before Facebook took it over. And when they took it over, I don't know, that just kind of ruined it for me. You have to sign in with your Facebook profile in order to get access to your shit. And then
if they do that with Xbox and PlayStation anyways.
Well, and if they close your account, then for violating your terms of service or just because they think you might have, then you lose access to all your games and shit. Like I've seen that happen to people. It's I don't know, but this isn't.
I hadn't heard of that. And
this isn't just a platform for me to bitch about Meta. This is a platform to look at the information.
I don't blame you for having reservations about it. I think that's actually an important part of the dialogue. And this actually, I think, leads beautifully into a trade idea.
Yes.
Is, as you can tell, there's still a pretty clear delineation. This isn't like super wide adoption. Everybody thinks this is going to moon, which is good. Like that's good for trading because it means that we can create two-sided action. And what we're seeing right now in terms of the after hours move, right now it's trading at 182.
Yep.
So the probability of it hitting 182 today was actually pretty high if you look at it. Well, now it's essentially priced there because it knows it's going to be there, but it was higher than I would have expected. So it means that there's enough mixed volatility about it, which makes it a very tradable product to me.
Interesting.
Yeah. So if you were to look at this, what would your just general trade hypothesis be?
So the big thing that sticks out to me right now is I had a resistance level drawn in at 184 and it's coming up but not passing that. So really my thesis kind of all revolves around that level. Do we reject off of that or do we accept above it? So I guess I don't know yet. I would think that it would want to reject off of that or at least initially get some kind of bounce, but I don't know. I think I'd want to see where it opens really.
Why 184?
If you look at it on the daily, zoom out to starting with
overall aggregation,
February 22nd, you'll see where, let's see, March,
February. So
mid-March.
1 year daily?
There. Yeah. Sorry, daily 1 year. Yes.
Yeah, that's right.
Yeah, if you look at that, you can see a pretty clear separation where that was a support turned resistance as the stock was meandering towards its lows in November.
I see. So you're talking about those two little touches like in the summer?
Yeah, there was touches in July and August from below, and then there was holding a support back in March and let's see, May, and then in June as well.
Got it. It's interesting to hear your perception of that because to me, I like to use volume profiles a lot. And those little upticks that we saw, I actually, if I were to pick the nearest resistance, I would classify it at 164, which obviously we've blown through that as of right now. That's where the previous point of control was on a 1 year daily. Are you familiar with points of control?
Yeah, that's where the most volume in that area. So it's like a high volume node.
Yeah, exactly. And then it looks like the next like reasonably high volume node was at 194.
See, when I look at these, like the high volume nodes, I look at as targets. Is that the way you treat them, or do you use them as like that's where you expect the price to kind of hang out at or stop at?
So the way that I view it is the volume nodes tells me that there's a lot of people that transacted at that price.
Yes.
And I believe that when we first approach volume nodes, it would serve as resistance
Hmm.
because it's the first opportunity for people that have been essentially uh, bid down for a long time.
Right.
Depending on the duration of the chart that we're looking at, it's their chance to exit.
Yes.
So it's kind of like I think it's a near term resistance until we break above it, just like any other support and resistance.
Hmm.
I think it's resistance until we start to like trace above it. And then at which point I think if there's still aggressive buying indicated by high volume on those days, then I would classify it as support because it tells me that people are interested in continuing to accumulate at that level.
So 164. Then would you have another one somewhere around maybe 194?
194 is the next one, exactly.
Yeah. And I don't have volume profile on this chart, so I'm just looking at where the bulk of the candles are.
Yep. Yeah, 194 would be the next one. And on a shorter term, 180. So like on a 6-month daily, 180 would be the next because we're blowing through a handful of pretty big points of control, volume nodes.
Right.
But the thing to remember is like on a 6-month daily, a ton of people, the point of control there is 97.84. So a lot of people got in when this thing was down pretty low and they still were holding. So to me, as I look at this, I agree with, some sort of near-term resistance likely coming in. I do think another important note when looking at volume profiles, I do like to kind of fit them to different timeframes. So if I'm looking at a 6-month daily, I'm going to treat those volume nodes slightly different than if I'm looking at a 1-year daily, just like you typically would with, longer term support and resistance. But yeah, if I had to wager, because there's actually a pretty noteworthy gap on the 1-year daily between 190 and 172. So I think there's very little resistance in that area until we get back up to 194.
Interesting. Okay, so so how do we structure a trade with this then?
Short.
Short? That was my inclination as well.
Short. Fuck meta.
All right, so what are we going to do then? How are we going to work this?
So I'm a pretty big fan of trading on personal vendettas.
Okay.
I'm just kidding.
Okay.
But I would lean short here.
Mm-hmm.
So the way that I would play this is twofold. The first one is I would wait until the open simply there's two things I think about. The first one is volatility contraction on the open, especially after a big move.
Mm-hmm.
Short straddle, something like that could be great. Right on the open. It has to be right on the open. Otherwise, you're going to miss the biggest contraction in volatility, and that is what it is.
Okay.
But there's a good chance that this thing could get some legs. And depending on how the market initially reacts, we could see, I wouldn't expect any sort of huge continuation up,
right?
Because I do think that it's kind of prone to run into at least a little bit of headway and profit taking. So I wouldn't expect a ton of movement to the upside, but I could see it rallying to 185 or something like that.
Mm-hmm.
So as long as you could get a decent short straddle in to take advantage of the volatility contraction, like first thing, I think that would be a decent neutral play that you can also gamma and then delta hedge out. I think the other idea that I would have is a really known phenomenon, positive earnings drift.
Okay.
And if we see it getting bid on the open, you could do something like, I wouldn't personally use far out of the money calls on this because I think a lot of the move is already being baked in right now, right? It's already up from 153 to 182.
Right.
So big moves already priced in. I wouldn't expect it to develop huge legs, but I could see it rallying a bit more on the initial optimism.
Right.
So something like deeper in the money, long calls, shorter duration is something that I would consider if I wanted to wait until the news was released. Some of the volatility is contracted out. There's a clear defined price movement going on. So that's actually really short. I would consider that a really short-term bullish hypothesis. That would not be something I would want to leave on even for the full day.
Mm-hmm.
I would want to catch that initial follow-through optimism and then get out. And then if I wanted to do a slightly longer term play, like maybe 2 weeks, something like that, I would be looking at short calls or a short call spread if you're nervous about upside risk. Something like Meta can get legs, so I would spread it out anyways. So for that short call hypothesis, something like the 17 Feb And you could do something. It'll get repriced on the open. The
Right.
options are super cheap right now because they're priced on the previous close. But you could do something like, right outside that near resistance that we're hypothesizing. So I'm seeing potential resistance on the 1 year daily at 194. So you could do the 195 or the 200 short calls.
Mm-hmm.
And then I would just spread it off though. So maybe, depending on your perception of risk, you could do 25 points wide or something like that. And I would just add the wings. I'm a little more cautious with tech stocks specifically because they can get legs and start running away from you real quick. And I hate getting stuck in that. Super annoying.
So you say it's 25 points. So you like the 195 call and then cap it with the 220,
Something like that.
To keep yourself protected on the upside.
Exactly.
Gotcha.
So I would go pretty far out of the money, and it's literally just for catastrophic loss prevention.
Right.
Otherwise, I would essentially be treating it more like a naked short call, but it's just to make sure that we're not getting swallowed up.
Yeah.
Yes. Super annoying. I've seen quite a few people get hung up in things, especially during COVID. People were fading some of the earnings releases, and they were getting eaten up on the short call side because there's a handful of products that can really get legs. And I don't see a significant benefit in attempting to capture that. So I'm more receptive to verticals in those instances just for catastrophic loss prevention, not to trade it as a direct vertical. But if I were to do that short play, I would also try to get that on earlier tomorrow morning to capitalize on the increased volatility before it's all priced out.
All right. Sounds like we got a plan for tomorrow.
3 trade ideas based on whatever your disposition is. If it were my trade, I would probably be doing the short straddle personally.
Short straddle.
Yeah, but it has to go on fast.
Right.
It has to go on fast. Within a minute.
I don't think I'm quick enough to get one of those in.
Oh, I think you're quick enough.
Not at short straddles.
Oh, God. Well, at short straddles.
Right. All right, folks. Thanks for everybody who stuck around to the end. Hopefully you learned something. Hopefully maybe you got some actionable ideas you can take away from this. And if you like this kind of thing, maybe give us a thumbs up. Maybe
and let us know what trade you would take.
Yeah, maybe do that, or maybe suggest another one for the next one. Maybe. No, sorry, that's a Family Guy joke. We'll be back soon with another exciting episode. But till then, y'all take care. I'm gonna just keep waiting till you say goodbye.
Bye.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks and the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.